Good morning, traders. This is Rick Majors here at Opteck.com. Welcome to today's daily market briefing. Thursday, May 29th of 2014. We've had a really interesting month, and it's kind of actually sad to see it come to a close. A lot of different turnarounds, projections, but worked out about 90% of what they were supposed to. A lot of the long-term trades that we took earlier in the month are all clearing in the next couple of days and are looking to be completely positive. Now, seeing what we have today, I want to make the first advisory to traders out there right now. The euro, as we can see here, the French are on a bank holiday, and the Germans are on a bank holiday, and the Swiss franc are on a bank holiday right now. The euro trading session is going to be highly depreciated because of this in terms of participation, in terms of volume. But with the current economic situation, with what's been going on in the euro in the last couple of weeks, I would also be happy to say you're more than welcome to just take that thing down for the end of the day. Take the euro down. It's just not been performing. This is a month that was said from the beginning is probably not going to be too positive for them until June comes along and the stimulus program is issued by the European Central Bank. We're not really expecting to see a whole lot of progress coming out of that. Now, moving on to U.S. markets, which is really going to be the main deal today. Now, we're looking to see the unemployment claims actually take a drop from what they were last week, down slated towards the 321,000 from a previous of 326,000. I'm seeing this is happening. It's more of a pattern issue. I think, simply that they rose pretty sharply on May 22nd, and they're starting to give their gradual decline. You can see this also if you look at May 1st as well. They took a pretty big step in rising in the amount of unemployment claims that were filed, and then the week after that, it managed to drop again. So I'm not really expecting after such a sharp gain in unemployment claims to see it go up any further. It's, for all intents and purposes, should be making a nice drop, so we should be seeing a nice gain from that on the U.S. dollar strength. Prelim GDP is not looking too good right now, but this is something that really doesn't overly shake me too much. The prelim GDP was something that was expected. We had in the States, I keep saying we because I am American, if any of you haven't noticed by my accent yet, but in the States there was a lot of bad weather during the early parts of spring, screwed up a lot of agricultural schedules. Transportation and manufacturing took hits from that as well, including the retail industry. This is going to hurt the prelim GDP for the quarter, but it's expected to pick up coming through the second quarter. And once we get the next report off of that, I'm sure we're going to be seeing a nice recovery from there. Pending home sales have also looked to come down as well. We have been seeing, though, pretty good information coming out. I mean, you can look at this actual that came out from a forecast of 1%, and now it's at 3.4. So the fact that it's actually going down on the long term, I think that it actually might even drive the dollar up further because we're seeing that overall growth is still increasing, even if at a bit of a weak rate. We're still seeing that overall growth is increasing. 3.4 was a big jump, as you can see, especially in relation to some of the previous markers that have been. You see these big jumps, and then this overall growth here is going to maybe be able to convince people to actually buy into the dollar further. The thing that I want to point out to you guys here is if you see throughout the history so far on pending home sales, there are huge changes here most of the time. You're going from 2.9 to 0.1, 0.1 to negative 0.8, and then also, look down to January 30th. You have negative 0.1 to negative 0.87, 8 negative 7. So you can see that these jumps are relatively regular, and then it tends to slow down afterwards a little bit. So keep an eye out for this. Don't look for it to change too many things, but I really want to see it actually give a positive marker towards the U.S. dollar today. Now, coming up Friday, last day of the week here, we've got a whole slew of things happening, medium impact, low impact, and then we only have the Canadian GDP, which, by the way, is set to decrease a little bit. So for those of you who took the U.S. dollar Canadian for the end of the month, this might be actually a last chance to get some strength into the market price. And if it does, as you can see with a strong dollar, currently this could overtake and actually recoup losses that were previously made on the dollar Canadian. I'm not expecting it to be an overly heavy day since it is Friday. It is usually a short day, but what you can expect from this is there's going to be plenty of volatility. There will be participation, especially since the fact that we had lost today in the European market. London's going to be online still, of course, and most of the other European trading centers, but Germany being the backbone of the euro economy right now and them not being online is really kind of the signal to say, let's stay away from the euro and let's move on to some other opportunities. Okay, guys, that's what I had for today in the Daily Market Briefing. Thanks for coming in. My name is Rick Majors. Don't forget to hit like and subscribe at the bottom of the video if you'd like to stay tuned with us from Monday to Thursday, 9 a.m. GMT. If you would like to get in contact with me personally, you can get me at rick.majors.opteck via Skype or rick.majors@opteck.com via email. As usual, folks, thanks again for listening to my Daily Market Briefing, and I'd like to wish you a happy trading day.